It's time for another episode of Let's Talk Business, featuring interviews with South Carolina business executives, community leaders, and government dignitaries. Let's Talk Business is a truly one-of-a-kind business-to-business talk show. And now, here's your host, longtime South Carolina business publisher, Rick Jenkins.
Hello, everyone, and welcome to another episode of Let's Talk Business. Whether you are listening to us today on 94.5 The Answer in the upstate of South Carolina, or maybe you found our podcast on Google or Spotify or Apple, or maybe you are watching us, our YouTube series. Regardless of how you found us, I am glad you're here. We got another good episode for you. I believe this is episode number 5, and I've got 3 guests today. And I'll tell you who's going to join us, and then we'll take a quick break, and we'll come back with our first guest and get started. We're going to talk with Jeff Froman today. Jeff is a financial advisor, and he is also a certified financial planner with Thompson and Froman. They are a financial advisory practice part of Ameriprise Financial Services, and Jeff is here to share some wealth management tips and some retirement investment advice, and we can always use that. Steve Hall will be with us. He is the Vice President for FGP, or Find Great People. And FGP, as many of you know, is a staffing, search, and consulting firm headquartered in Greenville, but they also have offices in Columbia, a somewhat new office in Charleston, and even one in Nashville, Tennessee. And Jody Bryson will also join us. Jody is the CEO at the South Carolina Technical Aviation Center, or SCTAC. And SCTAC is the only business park in the Southeast that is dedicated solely to serving the aerospace, automotive, and advanced manufacturing industries. I'm going to give you some information on SCTAC because it is an incredibly impressive outfit that they have out there. It sets up on 2,600 acres. It is the home of the state's largest general aviation airport, has an 8,000 foot long runway. It has on-site world-class automotive test track, which is really a thing to see. I've been out there. It's beautiful. It is home to well more than 100 technology innovation companies. It even has a full-service fire department dedicated to the companies located in the park. And, maybe coolest of all, it is the home to Lockheed Martin, which in turn is the home of the F-16 Fighting Falcon, which was last year or a couple years ago named the coolest thing made in South Carolina. So come back and join us. We're going to talk to Jeff and Steve and Jody, and it's going to be a good hour-long show. Don't go anywhere. We'll be right back.
I bet you want a website that drums up business. You see, every business wants to have an effective online presence that helps their business grow. At Drum Creative, we guide you through our process that will drive results by clarifying your message with a beautiful design that's strategically optimized for search. Visit our website at drumcreative.com and let us help you drum up business by designing a website that speaks to your audience and delivers results.
Thank you for tuning in for another episode of Let's Talk Business, a weekly one-of-a-kind B2B talk show with interviews with South Carolina business executives, community leaders, and government dignitaries. Let's Talk Business airs every Saturday at 4 p.m. on 94.5 The Answer, or download it on the most popular platforms, Apple, Google, and Spotify. You can watch the video of each episode on YouTube. Search Let's Talk Business South Carolina. Now let's get back to the show with your host, longtime South Carolina business publisher Rick Jenkins.
Welcome back, everyone, to Let's Talk Business, episode number 5. And I am sitting here with Jeff Froman. He is our first guest today, and Jeff is a financial advisor and a certified financial planner with Thompson and Froman, and they are a financial advisory practice of Ameriprise Financial Services. Jeff, did I say that right?
You did. That's right. Great. Thanks for having me.
It's good to have you here. It's good to see you. I haven't seen you in a while, so I appreciate you coming on the show and joining us. Before we get into, and I'm going to talk about a lot of things today because our listeners and our viewers are always interested in wealth management tips and some retirement advice, which I know you're going to provide. But before we do, let me just hear about you for a second. How long have you been in this industry?
Wow. I started in the business in 2003, became appointed in February of 2004. So, pushing 20 years now.
Wow.
Kind of funny. Started out as an engineer.
Engineer.
Yeah.
You went from engineering to this.
Yeah, I have a master's degree in control systems analysis, if you can believe that.
Well, I'll tell you, let me tell you, it's hard for me to believe because I am not near smart enough to get a degree like that. When I was in school, a few buddies of mine had engineering degrees, and I cannot even fathom the amount of math that you need to know to become an engineer. But you did it, and
it wasn't much fun.
I can imagine that it would not be. And now look at you. You've been doing it for 20 years. So
yes,
if
sir.
you started in 03, 04, you were a few years ahead of 2008.
Yeah.
We know what happened then.
Yeah, that was scary for everybody. And the thing I think that I learned in that first big downturn was the clients that did the best were the ones that gutted it out
Yes.
and stayed invested.
Yes.
The ones that got scared and got out lost the most.
Right. I'm glad you said that. Let me say this. I'll give a little piece of just an individual anecdote. My mother, who is no longer with us, she was going through what happened in 2008, and she was single mom and scared to death.
Oh, yeah.
That she was going to lose everything. Scared to death. And I kept telling her, stay, stay, stay. You sell now, you've lost that money. There's no getting it back.
Right.
But she was so scared that she ditched it. You know, she did what she should not have done, but there was no way for her to know that, and I felt sorry for her, and there's no way for anyone to know it. But it's the best advice, right?
Absolutely.
Stay still. Absolutely.
And we kind of saw that over the last, several years. We had the 2020 pullback for COVID. We had a big 35% dip in the market, but boy, it snapped back in less than 12 weeks. We were at new highs again.
Right.
And then again, just 2022, we had the highs in 21, which were probably a little overdone to begin with, but then a 35% pullback in the NASDAQ, almost 30 in the S&P 500. And we're recovering now, and I think it's probably going to take just a little bit longer to get back to those highs we were at in 21. So yeah, these are the cycles of the market.
Of course, and if you've been around a while, you see that kind of thing, and you yourself can be more comfortable with it. But what do you find with your clients? What percent? I'm just asking you to take a stab. What percent of your clients run for the hills, and how many of them know that hey, this is part of it?
None.
None run for the hills because you talk them out of it.
Most of my clients have been with me for quite some time, and we have these discussions on a regular basis. It's like we're investing according to the amount of risk they're willing to absorb.
Right.
So based on the risk profile, that's how we invest them, and their portfolios are going to move with the market based on how much risk they are willing to tolerate. I think I get more of, why aren't we up as much as the market is up? Well, you weren't talking to me about not being down as much as the market is down, several months ago.
Yeah.
But so you have to balance your willingness to take a loss against your greed. And for most of my clients, I think the conversation is around, what is our long-term goal? How do we get there? And is the investment strategy we're using going to get us there over the long run?
Right. So let's talk about what the market looks like today. Now, if we had looked at the market a year ago, it was kind of scary, right? Mm-hmm. Inflation was out of control, and it's been improving little by little, quarter by quarter. And so it looks much better today than it did a while back, even though we still have some work to do. But there is still volatility in the market.
Absolutely.
And there is still concern, and people still have cold feet. What are you seeing out there?
Actually, I think the biggest concern my clients have right now is still inflation. And then secondarily would be fear of a recession. So with inflation, while yes, inflation is moderating, we still have some factors within the economy that could bring that inflation back. Oil prices have been down, which means gas prices are down. Transportation cost is down. So that's been good for inflation. Recently, we're seeing those oil prices drift back up, so we could see some of that pressure reemerge. And then, of course, we have wage inflation. We just saw what happened with UPS, where there was a threat of a strike for better wages. So wage inflation has been a big issue, and that is usually the biggest driver for inflation. If you have to pay all of your employees more, then you have to raise the price of your goods more to cover that, and that's part of inflation. So the Fed has done a lot in the last year to fight inflation, and it's finally starting to take effect. Today, while we're talking, probably the Fed is going to raise interest rates another 25 basis points. Some believe that'll be the end of it. Our own investment research group thinks there's still quite a possibility of a second increase in the second half of the year here, probably before the end of the year. But we still see the end of the year being positive, even from where we're at now.
You know, I thought, well, there was a lot of talk that the last increase was going to be the last one. And so I was not aware that one was occurring as we speak.
Yes.
Did that come as a surprise to you?
No. Our chief economist, Russell Price, almost a year and a half ago, said that the Fed would push the Fed funds rate to between 5 and 5.5. Today we're at 5. After this increase, we'll be at 5.25. So that there's still room for another increase, according to our chief economist's prediction. And he's pretty darn good. He doesn't believe there's going to be a recession. He's like maybe 50-50, because we still may see negative GDP print on 1 or 2 quarters. But to have a technical recession, you have to see unemployment spike. And the jobs market in the U.S. is just so strong.
It is.
And so without that dislocation of employment, you really can't have a recession. So the consumer spending power will stay. What's happening is, because of interest rates, the ability for corporations to earn is coming back. I mean, earnings are down approximately 20% year over year in the S&P 500, and we're probably at the bottom of that earnings recession. And if we have a real recession in the real economy, it's usually the corporations that are bouncing up as the general economy is bottoming out. So we're probably in pretty good shape economically in the U.S. and market-wise.
Just a slight tangent. You mentioned the unemployment rate here in Greenville, although it is not back down to pre-COVID times, because we were talking 2.7%.
Oh, yeah.
I mean, historically good at that point. Even though it is not down there, it is still right around 3%, which is better than South Carolina and better by the nation as a whole by a good bit. But anyway, slight tangent there. Tell me, your investors right now, compare it for me to a few years ago, 3 or 4 years ago. Let's just say during the Trump administration. Okay, let's go back that far. What does their investment strategy on average look like today compared to 3 or 4 years ago? More conservative, I'm assuming, just because of the market, but tell me what you're seeing there.
I would say compared to 4 years ago, we're probably a little bit more conservative, and that was a shift we made in portfolios earlier this year when there was the threat of recession was higher. As we move through the summer, we'll probably get back to where our portfolios were 4 years ago. And the structure of the portfolio really doesn't change a whole lot. What I like to tell my clients is I don't make big bets. I make side bets. So we'll put overweight sectors in the economy. For instance, healthcare might be a good sector to rotate into at this point because it's generally a good recession hedge.
Right.
You know, everybody's got to go to the doctor at some point. But so we just kind of tinker around the edges. Our objective is to achieve a return consistent with the amount of risk they're willing to take, net of my fees, of course.
Well, of course. We all have to make a living, right? Let's talk about small business, small business owners. Tell me how those guys are faring. And I ask that with more interest than usual since I'm a small business owner myself now, but tell me how they feel.
My small business owners, for the most part, their biggest concern is a possible recession and wages. For those employers that have a number of employees, and you have to pay those wages seem to be creeping up, which of course compresses your margins. The amount of money that you're can make in your business. I think the other thing that for a lot of my business owners are single proprietors, probably like yourself. And their biggest concern is taxes. As we all know, in 2025, the Trump tax cuts for the middle class expire. So we have to go back to doing all of our, write-offs and figuring all that out. I have a CPA do that. It's like I always tell, as a CFP, I always tell my clients, I know enough about tax law to be dangerous.
Yeah, right.
So always talk to your CPA. But their biggest concern is, for those whose businesses are doing well, they're paying a lot of taxes, even now. And the fear of having to pay more taxes in the future, and how do we reduce the tax bill? And one of the best ways you can do that is by having a retirement plan. If you're a sole proprietor, or if you are a business owner with a lot of employees, or 3 or 4 employees, having a retirement plan that you can defer some of that compensation into and reduce your tax liability. And if you structure things correctly, if you're a very high earning business owner and say a sole proprietor, you can defer about $285,000 a year in a retirement plan if you structure it properly.
That is good information to know. And sticking on that for a second, I'm 57 years old.
Sure.
So I want to continue to do what I do for another decade or so. Other advice?
Gosh, you got to remember that even though you're only going to be working for another 10 years, you might be retired for another 30 or 35 after that.
Let's knock on some wood, but yes, you're right.
So, do you really want to become more conservative after you retire? If we look at this last year and a half with the inflation, clients, their money had to keep up with inflation, not just their spending habits, but their the inflation that was going on as well. So over the last, back in May, where inflation was, or not, it's a little further back than that, January, February, where inflation year over year was 9%. That means I had to produce 9% in returns for their portfolio to keep up with inflation.
Right.
Now, if they're in a moderate or a moderately conservative portfolio, it ain't happening.
Exactly.
But if we look at how we did over the past 10 years, if you remember way back in the day when inflation was running 1.5%, 2%, and I can produce 5, 6, 7% in returns, I was outperforming inflation for a very long time before this big spike. So we had a lot of returns banked for this spike in inflation, which is why you stay invested. Right. You stick with your plan.
Good stuff, Jeff. I'm going to get you out of here on this. Just one more thing, and it's about something that I know very little about, so I'm going to ask you just to bring me up to speed. Cryptocurrencies.
Oh, gosh. First of all, as an Ameriprise advisor, I cannot invest my clients in cryptocurrencies because they are unregulated, which means that nobody's watching out for you. So, and that's why you see the wild swings in the prices. Now, by definition, a cryptocurrency is basically an invention by somebody who coded a bunch of stuff into the internet. I guess, my personal opinion and my fear for all the people investing in cryptocurrencies is what happens if they're regulated out of existence. China's done it. You can't have cryptocurrencies in China. There's a few other countries in the world who have outlawed cryptocurrencies. And ask yourself this question. Is the U.S. government ever going to give up their dominance of the dollar, cryptocurrencies? I don't think so.
Right.
So the cryptocurrencies have a utility, and mostly the blockchain underneath that tracks ownership of things. That's how the cryptocurrencies were designed. It tracks ownership of a object on the internet.
Well, before I asked you the question, my inclination was to steer clear, and now that I've heard your answer, my inclination is to steer clear doubly so. Jeff, that was good info, buddy.
I appreciate you having me. It was fun.
Man, I'm glad you were here. It was really good information. And but folks, I don't want you to go anywhere. That was Jeff Froman. He's the financial advisor and a certified financial planner with Thompson and Froman. They are an advisory practice of Ameriprise Financial Services. But like I say, don't go anywhere. We're only going to be gone for about 30 seconds, and we will be back with our next guest.
Thrive Business Operations offers fractional COO services, and we work with business experts to provide clients and companies a suite and team of expertise to support their business operations.
COO, Chief Operations Officer, normally comes alongside the visionary or creator, founder of the business who has a lot of vision, a lot of creativity, and help actually execute that vision. A big frustration with business owners is their vision getting actually executed. A Chief Operation Officer is meant to do that. We do it at a fraction of the time and a fraction of the cost to bring savings to the company and bring excellence and processes to move that execution faster.
Thank you for tuning in for another episode of Let's Talk Business, a weekly one-of-a-kind B2B talk show with interviews with South Carolina business executives, community leaders, and government dignitaries. Let's Talk Business airs every Saturday at 4 p.m. on 94.5 The Answer, or download it on the most popular platforms, Apple, Google, and Spotify. You can watch the video of each episode on YouTube. Search Let's Talk Business South Carolina. Now let's get back to the show with your host, longtime South Carolina business publisher Rick Jenkins.
Hello, everyone, and welcome back to Let's Talk Business, episode number 5. And joining me now is Steve Hall. Steve is the Vice President at FGP, or Find Great People. And FGP is a staffing firm, a search firm, and a consulting firm headquartered right here in Greenville, but they have offices over in Charleston, which hasn't been there too long, I don't think. Steve's going to tell me here in a second, but also in Columbia, and even, if I'm right, in Nashville, Tennessee. Is that correct?
Yes, that's right. So 4 offices headquartered here in Greenville.
Yeah.
The newest office is Daniel Island, so that was back in March.
That's a tough gig, man. That's a tough gig.
Well, sometimes the travel down is not so quick anymore.
Yeah, that's true. That's true. And it's a hot place to be this time of year, but it's hot everywhere.
Yeah.
So, but Nashville.
Yeah.
How long have you been in Nashville?
We've been in Nashville since 2016 in terms of an office there, but we've had clients there for almost 20 years.
Okay. And why Nashville?
It's all tied to the healthcare space. That's sort of the mecca for healthcare in the United States.
Yeah.
And we've had several clients that were based there. And so one of our former clients said, I want to come work for you. And we said, we'd love to have you. Right. So that's how that got started.
I got it. No ties to the country music industry in any way.
Not that I'm aware of.
Okay, all right, just checking. Okay, before we get into things and I start asking you some questions, let's start with your services, FGP. Mm-hmm. I mean, I mentioned them up front. Of course, you're a staffing agency, but you're so much more than that. Let's talk about what you do provide.
Okay, so we do 3 things. Yeah. We find talent, and that's executive search, professional level search, and then the staffing that you referred to, or contract to hire. And then secondly, we help develop and retain talent. That's that middle component. So many people are focused on the front door, which is the acquisition component. They are not paying as much attention to the development and retention. And then the third piece is the transition side of the business. Yeah. There are times where you might decide that an individual or a department, or hopefully not, but an entire company needs to go away. And there's a compassionate way to do that. Yes. And we provide that compassionate route.
Got it. Let's go back to retention for a second. Talk a little bit more about that. I didn't stop to think about that aspect of it, but what does that look like?
Well, think about individuals on your team that are of high potential. Mm-hmm. They may be earlier in their careers, or they may not have actually been in leadership before, but their maturity or their performance gives them the right to be considered for a higher level role in leading people, or maybe even leading process. But as is often the case, if you just simply promote, you may be actually hurting them and you in the process. And so we have a team that works on things like executive coaching, leadership development, supervisor coaching. And then you just have the other aspects of outsourced HR and fractional HR for organizations that are smaller in nature. I was having a conversation just the other day with an owner of a company, and I said, "Hey, who does the HR?" And he said, "I do." And I said, "That's not a great idea."
Right. Fractional hiring is becoming so much more popular these days.
So some of that is a function of the demand exceeds the supply. And so whether that be a CFO or somebody at the executive level, but you can just carry that formula down into whatever level department you might be thinking of.
You know, so much has happened over the last few years, right? In March of 2020, our world's changed, and so many industries were impacted in so many different ways. But my gosh, the staffing industry, the employment industry, of course, was impacted greatly. And so what we saw here in South Carolina was, and let's just stay here in Greenville for a second, unemployment rates were at 2.6, 2.7. We're talking historically good numbers. Mm-hmm. And then, of course, they go well into the double digits. The hospitality industry tanks. It takes a while. People start coming back. All of a sudden, employees have a little more leverage than they've ever had before because of remote work.
Yeah.
And then you have something called the Great Resignation that occurred. And now all of a sudden it seems that we are morphing again. So all that being said, where are we today?
Well, so it's interesting that you mentioned the Great Resignation. Paychex, who you may be familiar with as a payroll company, national firm, they did a survey last fall, so the fourth quarter. 57% of the employees they surveyed, and I don't remember the exact total number, but 57% of them said they regret the Great Resignation. Mm-hmm. And part of that is that the jobs that they were promised didn't turn out to be exactly as great as they promised. And then in other cases, they just missed the employees and the family that they were at and some of the camaraderie and the culture. So while there was a Great Resignation, it didn't necessarily all turn out positive. And there's an old saying, which people maybe are familiar with, the grass is always greener on the other side. Yeah. But they don't hear the other side of that, which is you still have to mow that grass. That's funny. And so that's what has, I think, happened in some cases during that Great Resignation. Yeah. With regard to the rest of the market, basically, I would say the labor shortage is not going to go away. The baby boom generation, there's just more of them than there are of my generation, Gen X. And so we can't make that up overnight. And so it's the millennials and the Gen Zs coming behind that actually is that next wave. And so by 2030, just in a few years, 90% of the workforce in the United States will be millennial and Gen Z, because people like me will be hopefully retired.
Yeah. Yeah, I think that makes me nervous, Steve. I think it makes me nervous.
What, that I'm retiring?
Oh, well, that too. That too. That too. So we went, there were so many remote jobs for a while, right? You had to do it because, the company that I worked for, they required it. They required people to work remote for some reason. And, it was one of those things that I went into kicking and screaming a little bit. We can't do this. We can't do this. We all found out that it could be done.
Right.
We all found it could be done. And so what occurred at that point when we discovered that it could be done is companies wanted to save on brick and mortar. And so now, there were more jobs than ever being remote. But where are we now? Is that going to continue to be a big percent of the employees on a company's payroll remote? Or will that slowly dissipate and we're back to where we were?
So I don't really see the majority of employers back to 100% in office. I would say hybrid is probably the new normal for many, many years to come. Remote will not go away for certain types of roles in certain types of industries. Take, for example, the tech sector. It's still predominantly remote, and they have leverage on that. And they maybe even have a good argument for that. On the other hand, if you talk to most business leaders around the country, you will hear, I really would like to have our team back in the office. And if you ask why, there are many reasons, but one that really comes to mind is by the 100% remote, you've really lost your culture. Well, that's an advantage and an edge as to why you'd want to come work for me. And so I believe that most of us are saying it's time.
Yeah.
But I don't think all in all the time is necessarily the model that we're going to see going forward.
Yeah, I agree with you. We've lost camaraderie and we've lost some team aspect.
Yeah.
Maybe not completely, but we have lost some degree of it.
Yeah, I mean, if you just one thing to think about, if we're all remote,
Yeah.
and I have no real connectivity to you other than the screen, then if I get a call from somebody like FGP about a new shiny object,
Yes.
and it's just more money, well, then it's easier for me to disengage and pursue that. So there's lots of reasons why I think the in-person has value, but at least from a cultural retention component, I think it's a necessary component.
I didn't think about it that way, but you're talking about loss of loyalty because we're not sitting beside each other every day.
Yeah.
Right. Relationships dwindle.
That's
in
correct.
some regard. Makes sense. A couple more things, Steve. From an employer's perspective, what do hiring managers need to know or do to remain competitive these days?
Well, compensation is an important component.
Always.
And unfortunately, some organizations, that's state government, federal government, that's nonprofit, that's business, still are lacking the fortitude and understanding that they have got to pay a competitive wage to attract and then to keep the talent. Mm-hmm. I think the challenge there is if I have 10 people on my team and they're all at this or roughly this range, and I bring Rick in brand new and he gets a 20 grand increase, now we've got an inequity. And what do I do about that? And some would argue, well, you should have been incrementally increasing those salaries anyway. So it's a tough thing to do, but if you don't do that, you're not going to attract the really high quality talent, and you will probably lose the talent you have because you're not making adjustments anyway. In addition to that, I would say the flexibility of the work schedule, which we've already talked about. I think you need to be willing to have some creativity around that for your team. And then maybe another aspect of this is, in my opinion, you need to be willing to top grade your talent. And what I simply mean by that is I don't have any openings in my company, on my team, in my department, but I see walking by an amazing talent. I wish I could hire that person, but I don't have an opening. Well, you probably do have an opening if you'd be willing to part with one of your underperformers. And so that is what top grading would consist of.
Steve, good information, man. Good
Thank
stuff. I appreciate you being here.
Thank you very much.
Folks, that is Steve Hall. He is the Vice President at FGP, or Find Great People. Don't go anywhere. We're going to be back here in just about 30, 45 seconds, and I'm going to be talking with Jody Bryson, the CEO at SCTAC. See you soon.
I bet you want a website that drums up business. You see, every business wants to have an effective online presence that helps their business grow. At Drum Creative, we guide you through our process that will drive results by clarifying your message with a beautiful design that's strategically optimized for search. Visit our website at drumcreative.com and let us help you drum up business by designing a website that speaks to your audience and delivers results.
Thank you for tuning in for another episode of Let's Talk Business, a weekly one-of-a-kind B2B talk show with interviews with South Carolina business executives, community leaders, and government dignitaries. Let's Talk Business airs every Saturday at 4 p.m. on 94.5 The Answer, or download it on the most popular platforms, Apple, Google, and Spotify. You can watch the video of each episode on YouTube. Search Let's Talk Business South Carolina. Now let's get back to the show with your host, longtime South Carolina business publisher Rick Jenkins.
Welcome back, everyone, to another episode of Let's Talk Business. I'm glad you are here, regardless if you are listening in on 94.5 The Answer, here in the upstate of South Carolina, or maybe you're catching a podcast on Google or Apple or Spotify, or maybe you're watching our weekly video series on YouTube. Regardless of how you found us, I am certainly glad you did. I am here with our featured guest now, Jody Bryson. Jody is the CEO at SCTAC, or the South Carolina Technology and Aviation Center. And SCTAC is dedicated solely to serving the aerospace, automotive, and advanced manufacturing industries. Jody, how are you, sir?
I'm doing great, Rick. How about you?
I'm doing well. It is good to have you here. I have been looking forward to this. I'm not just saying this. I've been looking forward to this conversation for a while. One, because I haven't seen you in a while and it'll be good to catch up. But two, I find SCTAC such an interesting place. There are so many different factors that are happening at SCTAC, and I want to talk about all of them. We'll get into all of that. I'll let you give that nice elevator speech. But before we do, I just kind of want to hit on a few things that people should know as we get ready to talk to you. One, it sets up on 2,600 acres.
That's correct.
It's a lot of space.
Yes.
It is home of the state's largest general aviation airport, an 8,000-foot long runway. Correct? Is that
Correct.
The longest runway in South Carolina?
It's the longest general aviation runway in South Carolina, as opposed to some of our commercial airports.
How
which
long
have
is a
longer.
commercial runway? Just for
Probably 12,000.
12,000.
feet.
Got it. Okay. It has a world-class automotive test track.
It does indeed.
There, which I have seen, and it's really cool. Home to well more than 100 technology innovation companies, which blows my mind that there are that many companies out there now. This one always cracks me up. It's got a full-service fire department dedicated just to those companies that are there. And maybe the coolest of all, it's home to Lockheed Martin, which in turn is home to the F-16 Fighting Falcon, which
exactly
was
right.
a couple years ago named the coolest thing manufactured
Got
in
my
South
lapel.
Carolina.
I'm wearing my lapel pin
Is that
today.
what it is?
Yeah.
For those
there
listening
it is
on the
right
radio,
there.
Jody's got a lapel pin on of the F-16. I would not object to someone sending me one of those.
I'll make a note.
All right, Jody. So there it is in a nutshell. You tell me in your words about SCTAC.
Sure. I'm in my 17th year, which is hard to believe.
Yeah.
We've seen a lot of change over the last decade and a half. For some of your listeners who may not know, SCTAC was originally built as an Army air base in 1942 for the efforts of World War II. And it operated as an Army air base until the Air Force was created several years later, and it became an Air Force base. And that's when it was named after Captain John Donaldson, who was a World War I flying hero from the Greenville area. So it went from Greenville Army Air Base to Donaldson Air Force Base, and then it was decommissioned in 1963.
I was aware of Captain Donaldson. I was not aware that the Air Force was not created until a few years after that. So the Air Force was not officially created until after World War II.
That's my understanding, yes.
I did not know that. Interesting. So you have 110 companies out there.
Yes.
I mean, we're talking automotive and aerospace, of course, advanced manufacturing in general, OEMs, suppliers.
Yes.
Give me an idea.
Very diverse mix of industry at the park. After the base was decommissioned, the city and the county set up an organization to redevelop the base into an industrial park. And some of the very early entrants to that park were companies like Union Carbide Corporation. 3M set up a dual manufacturing site there. And then, a few decades later, Lockheed Martin came along as an airfield tenant. But there have been a number of other companies, such as Ethos Chemicals, which is a privately held company that has been out there for decades and has expanded multiple times. Michelin has an operation there that is primarily R&D, but they do some boutique manufacturing there as well. They've recently expanded. We have a lot of automotive suppliers. Diversified Coating Systems is a tier 2, tier 3 automotive supplier company. And then you've got entities like Greenville Tech, who has their aircraft maintenance school located there at the park. The South Carolina Army Air National Guard has an aviation center of excellence comprised of 3 separate state-of-the-art facilities serving all of their aircraft in the state, and housing all the Chinooks and Lakota helicopters. So you got Thermo Fisher, which is a multi-billion-dollar global company located in the park. Stevens Aerospace. The list goes on and on and on and on. And
I bet
they all come, they all stay, and they all expand, and for the most part are very successful.
retention is good.
It is good.
I guess when you have an anchor tenant like Lockheed Martin, right, things are going to be good. I was not aware, I don't think, that Greenville Tech was out there, but of course that makes perfect sense. Fire department. Why do we need a fire department out there? Make sure the planes don't catch fire, or what? I mean, what?
The fire department does a lot for the companies at the park. They provide customized, complimentary safety training for all the companies. They'll work with their employees in order to design something that is specific to that company's manufacturing operations. So they have a lot of hazmat capabilities. They're also first responders in the park, and they are constantly out working with companies. They're very pro-business, and they want to put safety first for whether it's a long-standing company, such as a 3M, or if it's a brand new company that's coming in for the first time and needs help getting those types of things established. The fire department has been there.
Just kind of jumping around here as things come to my mind. There's so much happening out there that just things are popping in my head. How do you know how many employees are out at SCTAC through those 110-ish companies?
Yeah, it's a moving target.
Sure.
It ebbs and flows, as you can imagine. My latest estimate would be around 4,000 employees, and which is a good number.
I would assume Lockheed the largest employer?
Lockheed's, yes, Lockheed is the largest employer, and they're adding a lot more employees as we speak.
Right. You know, Dr. Keith Miller was here, president of Greenville Tech. He was here for our last episode, and he sat right here where Jody was sitting. And we talked about a lot of things. We talked about how Greenville Tech supports manufacturing and aerospace and plenty of other industries. But we were focusing on manufacturing in the upstate of South Carolina. And we used Lockheed Martin. He used Lockheed Martin as an example of the types of conversations that the Greenville Tech folks might be having. So, you know, his example was they might sit down with a Lockheed Martin representative, and Lockheed might say, you know what, we need 275 people to do this job, and we're having trouble finding them. Let's partner and figure out how to get this done, you know, and solve this workforce issue. And so we had that conversation. But Lockheed, always looking for folks, and what great jobs, and they pay well, and you don't have to have tons of education to get some of those jobs.
That's right.
Mechatronics certificate and a 2-year degree, right?
That's exactly right.
That'll get you in that door at Lockheed to do really cool stuff.
I'll tell you a story. I was in Paris for the International Air Show with a delegation from the state of South Carolina recently, and we were meeting with some of Lockheed's corporate personnel there about the Greenville operations and how well things are going. And O.J. Sanchez told a story about he was recently touring the production floor for the F-16 and came across a young man who was working on the line, and he looked very young. And so O.J. went over and introduced himself to the young man, said, you know, tell me your name and, you know, how things are going for you. And the young man said, well, I started just a few weeks ago. I'm 18 years old, but I couldn't be happier in my job. And O.J., as you can imagine, was just beaming as he shared this story with us. And I'm thinking, how cool is that an 18-year-old was able to complete his high school diploma, complete the degree that he needed in order to produce billion-dollar, sophisticated, state-of-the-art aircraft being sold in a global marketplace, and be a key part of that, and just loving what he was doing.
Right.
It was just a great, great story.
It is a great story, and it's funny because Dr. Miller and I also discussed that these high school students now have the ability to do what, you know, you call dual enrollment or early college, and so you can graduate high school with a 2-year degree, depending on what happens, and now you're 18 years old, and doing something that cool. That's great.
And making a good salary, by the way.
And making
a
good
lot more
salary.
than I did when I was 18.
Oh my gosh, I guarantee you that's the case. There is a automotive test track out there.
Yes.
Tell me about it.
Well, so I'll go back with a little history. Back in 2007, we decided to create the organization's first economic development strategy because we wanted to be involved in helping to recruit industry and business to the state, and we knew we had a lot of assets to market there at the park. And so as a result of that, we identified a vacant runway that was 600 acres, a mile long straightaway, concrete straightaway that was a military runway, 300 feet wide, that was just kind of sitting idle in the park. And I've been thinking in the back of my mind, how can we figure out a way to work with our friends at CUI Car, which in 2007, they were just getting up and running as well, just a couple of years earlier than that. And I was talking with a gentleman, good friend by the name of John Boyette, and he said, I want to introduce you to somebody who's been involved in the strategic plan for CUI Car, because he pointed out that the one thing CUI Car doesn't have on their campus is a test track. They have lots of labs and lots of capabilities to do testing in-house, but nowhere could they go and really test in the real outdoor elements. And he said, I think your closed runway might have some potential there. So anyway, long story short, we had a couple of conversations, and the seed was planted. And not long after that, looking for a way to support the state's automotive industry, just as we've been supporting the state's aerospace industry for so many years with our airfield, we decided to go down that road. And so we created a brand, the International Transportation Innovation Center. We were able to get some funding from the state to do crack repair and resurfacing of that original mile-long, 300-foot-wide concrete straightaway, and we started marketing it. And one of our first customers was none other than Proterra Electric Buses, built right here in Greenville, South Carolina,
right,
just a few miles from our park. And since then, we've reached out and been successful in working with other companies such as Volvo Trucks out of Greensboro, ZF out of down in Lawrence County. Michelin has been a customer from time to time, and then most recently, Ford Motor Company set up an autonomous vehicle closed test bed at our track for one of their subsidiary companies, Latitude. So they're doing autonomous vehicle testing out at the track.
What wonderful partnerships that you have been able to oversee and develop over these last couple of decades.
It's been very exciting. It's been,
of course it has.
Been a real gratifying project so far.
Sure. And I can't imagine that anything being more gratifying than Lockheed Martin coming in. How did that occur?
You know, I could not be more happy for Lockheed Martin Greenville. When I arrived at SCTAC in 2007, we were the organization was in the middle of trying to renew a 5-year lease agreement with the company. And the company needed $3 million worth of upfits to some of the facilities out there, which are pretty old. Some of them date back to the World War II era. The organization was having a struggle to come up with $3 million, and but we did, and we were able to renew them. And then, you know, Lockheed's business at that time was 100% maintenance, repair, and overhaul work, which is primarily, you know, Department of Defense contracts. So it was a very cyclical business. They'd get a new contract and they'd ramp up, and then they'd finish that contract and they'd fall down. And it just was a constant up and down. And there was always talk of, are they going to shut down? Are they going to move everything to Marietta? And then the opportunity came along for the F-16 production. And long story short, the F-16 had been produced in Fort Worth, Texas for decades. The company had made the strategic decision to produce the F-35 aircraft there. And so then they were trying to decide, should we just shut down the F-16 program or should we continue it in another location? And some wise executives at Lockheed said, we think there's a global market for these F-16s, which by the way, are the most sophisticated F-16s ever produced, the Block 70 F-16s. They're not your grandfather's F-16. And so they looked around the country, and Greenville, South Carolina was selected as the new site for the production of the F-16. So all of a sudden, that up and down pipeline had a steady line heading up in the right direction, which has taken a lot of the stress and worry about Lockheed Martin's role here in Greenville, South Carolina. Long term, we're not very concerned about that anymore because Greenville today is the global home of the Lockheed Martin F-16. There's no other site in the world that does production and sustainment work in one location.
Just another reason why the upstate of South Carolina is becoming one of the premier advanced manufacturing hubs in the Southeast, I think, and it continues to grow. Jody, great stuff. Great stuff. I appreciate you joining us.
Rick, thanks for the opportunity. I really enjoyed it.
You are welcome. Folks, that is Jody Bryson. He is the CEO at SCTAC, or the South Carolina Technology and Aviation Center. And that concludes another episode of Let's Talk Business. I appreciate you guys joining us, and we'll see you next time.